Uh, Morning, everyone. Welcome to this week's market commentary. Today, I'll be walking you through to this company called Triyards Holding. Okay, just a brief company snapshot. The share price closed on last Friday was 65 cents. The 52-week range has been 61 cents to 81 cents. The forward PE is 5.2x. Okay, just a very brief company background. What is Triyards and what they do? Triyards is headquartered in Singapore and listed in the Singapore main board. It provides integrated full-service engineering, fabrication, and ship construction solutions. Their main focus remains on the sophisticated service platforms, which mostly they deal with OSVs and the fabrication of self-elevating units, SEUs, which are also known as lift boats in US. The company recently acquired Strategic Marine, a shipbuilding and fabrication company, for 23.3 Australian dollars. Strategic Marine is a Australian company. Okay, the business overview now. What they actually do, they are specialized in shipbuilding, so they construct OSCVs, which are the advanced construction vessels, support vessels, and self-elevating units. SEUs or lift boats are also support vessels that are built to help build the actual production platforms. And there are a number of purposes for what SEUs can be used. I'll be discussing that later. They also do rig building. They recently have their own proprietary design, which is called TDU 400. It's a state-of-the-art technology within the rig building business, and they're aggressively working on to market this design. They also do offshore engineering, construction, and fabrication. They do ship repair, maintenance, and conversion as well. And the most important thing are they're located. Their 3 big yards are located in Vietnam, with a dock pit, and they're situated along the South China Sea, which further enhances their competitiveness. In Vietnam, it's like cheap labor, highly skilled labor available. So it's a nice place to have shipyards. Business overview of Strategic Marine. As like I mentioned, the company is an Australian company, but their main yard is still located in Vietnam. And I'll show you that their yard is the proximity is very near to where Triyards yard in Vang Tao region is. The company has produced more than 360 quality craft, which include government high-speed patrol boats. That's their kind of like niche market where they're targeting at. They have done offshore oil field service vessels as well, harbor and towage vessels, passenger vessels, military and paramilitary vessels as well. Overview of the SEUs market now. So what are SEUs? Now, self-elevating units are, like I mentioned, lift boats. It is an offshore service platform with large open deck space, jack-up legs, cranes, and can provide accommodation facilities as well. They are used to perform a broad spectrum of services for oil and gas sector. The services include repairs, maintenance of production platform, well servicing, and there's a range of things they can do. And on the bottom you can see like 2 pictures. That is actually what SEUs looks like. So they have the jack-up legs, and they're self-propelled, so they can like go in the middle of sea, and then like these legs can go down to the ocean bed, and then that is how they can perform their services to the production platforms. So global demand for SEU considering falling oil prices. Now we all know that the oil prices are around $75 a barrel. It has plunged in the last few months. But here's what we believe about the SEU, especially the SEU or lift boats market. Uh, we still believe that the demand for SEUs will remain stable, if not increase. And following are the good reasons, for that. Number one, because shallow water offshore fields remains a major source of oil production, and demand, I mean, they're the major source of oil production, and such field the demand for such field uh, will remain high due to lower production costs. And once you have a lot of production facilities, they need maintenance work, they need servicing to be done as well. And especially since the oil price is falling down, the capex for in the deep to ultra water uh, region will actually shrink, and that will help to bring more capex to the shallow water, to the existing platforms, and to their maintenance and servicing to be done. Aging offshore infrastructure is another reason that most of the infrastructure and platforms within the shallow water regions, they are aging now, and they need extensive maintenance and upgrading works to be done. And for that, you need SEUs, you need lift boats to help do all those things. Again, growing need for maintenance of offshore renewables, especially on the North Sea, because North Sea, they have like wind farms and stuff like that, and for that as well, lift boats are the most cost-effective solution. And then increase in supply of oil due to shale oil will reduce the capex in the deep to ultra-water field, like I mentioned, and that will help pave way for more capex on the servicing of the shallow water platforms, and that will drive up the demand for SEUs as well. Now, what are the growth prospects? What are the growth prospects for SEUs? Well intervention in inspection, repair, maintenance, like I mentioned, in the Middle Eastern and North African region, North Sea and Southeast Asians are expected to remain the largest market for SEUs. Reasons are very simple. These regions have a lot of shallow region platforms, and for that, these SEUs can be used. While EOR, which is the Enhanced Oil Recovery, is forecasted to be the catalyst for an upside beyond 2020. So because of the enhanced oil recovery methods being implemented in these shallow regions so that more oil can be extracted, we believe that even after 2020, when these methods are implemented, SEUs will be the actual servicing platform to be used to help to do these things. And then according to Douglas Westwood report, the addressable vessel demand days are forecasted to grow by 12,141 to 41,386 from 2013 to 2020. That presents a CAGR of 5.1%. Then another reason, extremely low penetration rate in MENA in Southeast Asia implies best opportunities for growth. The penetration rates are very low actually in these regions, and you can see on the table on the left hand side that in US they got 14 for every 14 production platform they got 1 SEUs, while this number is like 60 in the region of including Southeast Asia, Middle East, North Africa, and West Africa. So the potential market size is at least like 179 SEUs. Can be brought up in this market to increase the penetration rate. Okay, investment highlights. Why Triyards? Okay, Triyards have definitely got an edge, especially in the Southeast Asian market. Why? Because Triyards' strategic focus has remained on the self-elevating units, which are the lift boats. They are the market leaders in Southeast Asian region. The group has delivered 7 SEUs so far since its inception, and has established a very significant track record, when it comes to building advanced and sophisticated SEUs. Then strategic location in Vietnam, like I mentioned earlier, 3 of their yards, including the strategic marine yard, are located within a major shipbuilding cluster, uh, and they're on the shore. They're along the South China Sea. The 2 yards in the Vang Tao city provides a total facility size of 281,600 square meter. And these 2 yards, one belongs to Triyards and one used to belong to like strategic marine. Now they are together. They're like within few hundred meters distance only. Uh, and then the proven track record. Just to mention, they have built the world's largest OSV, which is the Lyric constellation that they deliver this year, which is a state-of-the-art deep-water multi-lay vessel with 3,000 million tons heavy lift capability. Then they also have built the world's largest lift boat, which is the BH450 model that they delivered last year. And currently they are working on this model. They already have I think two more of the same design in their order book. Then the energies with Ezra. Ezra currently holds around 67% of its stake of the ordinary share capital. Triyards stands a good chance of realizing synergies with Ezra, of course, because any work that Ezra brings will go directly to Triyards. They have already built a number of OSVs and SCUs for Ezra, actually. Expand production capabilities. Triyards management is looking to diversify its business by focusing on ship repair operations and expanding its crane making segment to cater third-party clients. Number 2, like I mentioned, they're looking to expand in the jackup rig building segment as well. They have already designed their own proprietary drilling jackup known as TDU 400, and currently marketing it so that once they get the maiden contract, they can start building this rig for their clients. So these two are the main diversifying. Organically, they are diversifying this through this way. Establishing presence in new market, they are expanding their presence within the Middle Eastern, like I mentioned, because Middle Eastern market and the West African market, low penetration rate translates into higher demand in the future. And there are few global lift boats or SEUs constructor that are located in that region as well. So they're trying to go into that market and compete with those competitors. Synergies with new acquisitions. So like I mentioned, they are diversifying through getting into the crane making segment and into their drilling jackup TDU 400 jackup platform. That's organic. Now inorganically, they just did an acquisition, like I mentioned. Triyards acquired Strategic Marine in October this year. The intention was again to diversify their product categories so as not to be overly reliant on the offshore oil and gas industry. Strategic Marine expertise lies more on construction and fabrication of high-speed aluminum-based vessels used in military and paramilitary, and can be used in other non-oil and gas sector as well. The QS in which we believe might be the rising competition by the current SEUs constructors. So Triyards faces emerging competition from other local and international reputable construction services. There are only a handful of these companies which produces advanced lift boats like what Triyards do. But the good thing is there are high barriers of entry for new entrants, for newcomers. So it's not easy for newcomers to get into the market and establish themselves, So they faces competition from the existing mature SEUs building companies. But like I mentioned, they want that they are actually going into their market as well, so it's a two-way thing. In SEUs, in Southeast Asia, they currently hold the market leading position. So this is the facilities overview. They have got one yard located in they got one in U.S. Houston where they do all those engineering works. Then they got two in Vang Tau region, Vietnam. That's the one I was talking about. That's the big one. I mean, the total area of around 2800,000 plus. They got another in Vietnam with 100,000 square meter facility as well, and then they got a small one in Singapore as well. They actually got one more in Australia as well. It's a small facility to do mainly to do those repair and engineering works only. Okay, peers review. So I was mentioning about those international competitors to Triyards. So in total, only 15 yards have been involved in the construction and repair of SCUs globally. On the global level, Halomar Shipyard on the Gulf of Mexico coast has constructed the most number of SCUs, which is, you can see on the chart, around 14. But they're all deployed in the same region, Gulf of Mexico. They only build and deploy those lift boats in the U.S. region only. Outside the U.S., the most reputable constructors, include GMS, which is Gulf Marine Services, Lamprell, and Triyards. So these three are the most reputable constructors outside the U.S. Now, GMS and Lamprell are mostly active in the Middle Eastern region, and GMS only produces lift boats for their own company to charter later. So they do not build for third parties yet. Lamprell build for third parties as well, while Triyards takes the market share in the Southeast Asian region. In most of the lift boats deployed or built in the Southeast Asian region are built by Triyards. Financial results and highlights. Triyards revenue declined in financial year 14 to 269 million. That comes to around negative 2.4% year-on-year change. The decrease in revenue was due to the lower revenue recognition from the last stage completion of Leeward Constellation. They recently delivered Leeward Constellation, and because the building of these vessels, right, they follow an S-curve, so around like 10% are recognized during the initial stage and during the later stage, while the big chunk of 80% are realized during the middle stage. So that affected the revenues, plus lower than expected contract wins was also one reason. Now, Triyards generated negative 5.46 free cash flow from increased working capital and capex needs. Net gearing, okay, is 51%, but we need to understand that usually companies like this with lumpy revenue generation, they usually have net gearing of around 51%. But out of that 51%, one point to note is that 94% of these borrowings are related to working capital requirements and in form of short-term bank term loans. So it's not long-term. The reason is because when they get a contract, the contract was few like 50, 60 millions, and like you mentioned, they don't get the money all in upfront. They only get, I think, 10%, around 10%. So they need to come up with enough money to buy the supplies and to start building the SCUs or any vessels. Then Triyards order book stands at around 325 million USD, providing a solid visibility for next 18 to 22 months. We taking the percentage of completion estimation and then looking to how many vessels are at what stage of completion. We believe that more than 2% of this order book will be recognized in financial year 2015, and this is up to now. I mean, of course, we are in the first quarter of FY15. There are 4 quarters to go, and definitely they'll be winning some more contracts. They'll be doing ship repairing works. They might be able to sell their first TDU 400 rig, which will definitely boost the revenues. We haven't taken that into account because we wanted to be more conservative. But then business coming through, when they start selling cranes to third party, might also increase their revenues. These are some of the things that they might do, but we, being very conservative, we chose to to go with mostly with the order books extending and with estimation of maybe 1 to 2 SCUs order that they might get in near future as well. We estimate the net profit for financial year 2015 to increase by 34.5% to 36 million USD. These are some of the charts you can see on the left-hand side that their gross margin has been increasing. The reason for the net margin to decrease while the gross margin increasing is because of the increased administrative costs and their decrease in incentives of taxes, because they were getting some tax incentives in Vietnam, and that's being reduced gradually. Plus, their administration cost, it has been increasing because of the marketing efforts, and because also they are now planning to go into the Middle Eastern market, so that will increase administrative costs in the future as well. These are some more charts for you to take a look in. You can see the net gearing is actually on a decline since FY12. And like I mentioned, most of the net gearing are like in terms of working capital only. Okay, the valuation. So for valuation purposes, Triyards currently trades at forward PE of 5.2x and a forward EPS 14 cents, which is way below from what it appears at trading at. You can look into the table, and the forward PE column, you can see what are the forward PE most of their competitors and most of the shipyards within listed in SGX are trading at. Currently, 3 of its main competitors, which are the listed companies, because most of their competitors like Helamar and Bollinger, they are privately owned companies. So there are 3 main listed companies as a competitor are Conrad, Lamprell, and GSM, and they are trading at an average forward PE of 8.4x. Other small and mid-sized shipyards, because we thought because these Conrad, Lamprell, and GSM, they're all listed outside Singapore, and taking those risk premiums into account, we thought, okay, we should add those small to mid-sized shipyards listed in SGX as well. And that includes companies like Lam Chiang, Dynamic, and Vard Holdings, Automarine. And currently they are trading at an average PE of 11.7x. The Spider Oil and Gas Equipment Services ETF is it actually tracks companies involved in the services sector of oil and gas sector. It trades around 13.1 for PE. So to remain conservative in our valuation approach, plus considering that the low oil prices will affect the market sentiment, like in next few months, we took a discount of 30% to an average forward PE of the entire. If you can take a look into the table. The average entire PE is around 10.6%. We took a 30% discount to that number to come up to 7x, 7 PE ratio. Okay, before I go to the last part, the recommendation part, this is the summary of the investment mirrors. First, they are the front runners in SE, Southeast Asia. They are the market leaders, and one of the very few shipyards which can produce highly advanced and sophisticated OSVs and lift boats. They have a solid track record. They have built the world's largest OSV, which is the Leeway Constellation, and the world's largest SEU, which is the lift boat BH450. They are venturing into the global markets now, especially the Middle Eastern and West African market, where the penetration rate are very low. I think around 24% something. They have the experience management, combined experience of around 100 years, value synergies with their new acquisition because now they have two big yards within the Vung Tau Vietnam shipyard, and that will help them to take even bigger projects because now they can, and they won't have to go through those transportation costs between the two yards. Their design, the TDU 400, they're aggressively marketing it. This jack-up rig will cost around something 200 million USD, and like I mentioned, we haven't taken this into account in our evaluation for the revenue. So any deal struck in this thing will definitely take the revenue to go up at least by 100 million or something. The order books remain strong, like you mentioned, around US 325 million as of Q1 of this financial year. So based on that, we are very positive on Triyards for being the market leader in building advanced SEUs and OSV. We initiate our coverage on Triyards with a buy rating in view of its investment merits and solid growth potential, taking a deep discount of 30% from its peers average of 10.6. We came to a forward PE of 7x, and we value Triyards at 98 cents, pegged at 14 cents EPS. In Singapore dollars. This implies at least 50% upside from the last closing price. With this, we will end our presentation here and we'll start taking questions. Hi, there's a question on gold and our view on gold. We currently hold a bearish view on gold. The currently gold hovers around like 1200 level. We still believe when the global market picks up, the global economy picks up, the gold might further go below 1200, maybe below 1100 as well. So we are very bearish on gold. Then there's a question that how much strategic marine contributes to Triyards' bottom line. That will be around 15–16%, and that will help to diversify their business because strategic marine mostly deals with oil and gas sector. They mostly deal with military, paramilitary vessels, those small speed boats and stuff like patrol boats, passenger boats, things like that. So that will help to diversify their business. And in a market where the oil prices are so low, 15% of their revenue, of their profit, the bottom line will be coming from strategic marine actually. Okay, there's another question. How do you see the ASEAN recent investment into Triyards? What's the benefit for both the companies? So in the recent announcement, they struck a deal where I think ASEAN will buy the warrants, which will be around less than around 9% of their total market cap, at a price of 74 2 or something, around there. Now the question is, why did Triyards sell the warrants? Do they need money or something? The actual reason is no. If you read the entire announcement, there's a okay. If you read the entire announcement, there's a thing where it says that ASEAN will have to bring around 150 million worth of contract mutually agreed before these warrants can be vested. So it's not like these warrants will be vested immediately. ASEAN will have to bring at least 150 million dollar worth of contract to Triyards. Now if you look into the announcement, the last page, right, they have their illustration of how the EPS will change. Surprisingly, their EPS will not dilute. Actually, after the issuance of the extra shares to ASEAN, the EPS will go up, and the reason for that is because ASEAN will be bringing at least 150 million worth of contract to them. That will increase their earnings. So that earnings increase will be more than the increase in the share in the denominator. So it will help to actually increase the EPS. So it's a beneficial thing for both, because ASEAN Triyards, like I mentioned, is a very good with a good business to invest in. And ASEAN wouldn't mind to get a stake of like 8 to 9% in this company. And Triyards, on the other hand, will be getting good revenue from ASEAN through their contract, and only then this warrants will be vested in. Another question is, they have not sold any TDU 400 at all. Why are you so confident that they will sell the first one in the near future? Okay, they haven't sold the TDU 400 at all. It's correct, and like I mentioned in my presentation, that we have not taken that into account yet. So our revenues, the top line, does not take into account any sales of TDU 400 in the future. We have been very conservative coming out with the target price. We've been very conservative. We did not take this into account. The reason is very simple, because they haven't sold it yet, so it's hard to like make judgment whether they'll be able to do it in the near future. But looking around how aggressively they are marketing this product, and especially now they got some alliances within the North Sea counterparts as well, and the strategic marine already have presence in those markets, the European market, the Middle Eastern market. So taking help from them, using their clientele base, they might be able to sell it. But like I mentioned, we haven't taken that into our valuation. Do you, there's another question. Do you view the current slump in the oil price as a short-term downtrend or more of a long-term structural shift? Uh, the slump in the oil price will actually, within the oil and gas sector, will do a long-term structural shift probably because in my presentation I was like mentioning that the capex from the deep to ultra which where the production costs are higher than the shallow water will actually shift to the shallow water area, and that's why the entire thesis was that SCU's demand will increase because of that.
Hi, Benjamin here, offshore marine analyst. So it's a question on if the oil price falling steadily, how does it impact the oil and gas sector? Which part of the oil and gas sector is likely to be hit? Let's say if you look at the Singapore context-wise, previously when we gave a little a talk on the offshore marine sector, Singapore-wide, if you look at the different kind of plays across the life cycle, the ones that will hit the hardest are the asset builders as well as the asset owners, especially those with deep water exposure, like what Osama just mentioned. So in terms of deep water exposure-wise, players that are involved will be like Ezra, where we share. They have quite a lot of deep water exposure to the OSV sector, as well as VAT, right? So for them, they also deal with proprietary designs for deep water sites. So as you can see, their share price has been hit the hardest. Of course, next one following in line will be Keppel and Sembcorp, right? These two are rig builders. Although Keppel, their order book exposure-wise, we are seeing more shallow water in terms of jack-up exposure, like generally wise across the two rig builders. Sentiment is not doing too good and likely to be impacted in terms of order wins going forward for FY15. So these are where we hit hardest. So for players that are more in the servicing sector as well as more exposure towards the production side, those are the ones that will be hit less likely to be hit as hard as the ones in the upstream sector. All right.
There's a question that net income for last 3 years reducing from 44.1 million to 31.4 to 26.7. Trends looks bad. Actually, the reason in 2012 for such a high revenue was because of the Leeward constellation. The biggest OSV that they produce, the world's largest OSV, and the biggest chunk of its revenue was recognized during that time period, and that's why you'll see a very huge jump during that time period, during that financial year 2012. But because we understand that they won't be dealing in with such projects anymore, because they are looking more into those uh, high margin businesses like crane businesses and the TDU 400, the rig business, or the SCU business. So that is the reason we even if you take it the revenue, the top line, we still believe that the revenue will mostly come from SCUs. 2012 was an exceptional case. The revenue came mostly from the Leeward constellation, their big OSV. So that's the reason.
Hi, this is Vincent, your macroeconomist on Malaysia. So someone inquired about Bursa Malaysia. Mm, asking that why the Malaysia Bursa is on the downtrend when the US is on a bull run to record high. At the moment, PSI is having is maintaining our stance as neutral way on Malaysia. Actually, one of the reason recently it was due to the oil price, the second oil price subsidies cut. So although that okay, and another reason is because of the being that Malaysia is a the only net exporter of oil in the Asia, Southeast Asia side, and given that with the oil price decreasing, and it's actually a good timing for them to cut their oil price subsidies. So that should be able to support Malaysia ringgit as well as on the current account when US hike their interest rate. So fundamentally, they are fundamentally wise, they're actually improving from there. Although that we might see inflation spike in near term. In near term, probably due to higher costs, we might be seeing there. We might be seeing a higher. We might be seeing a compression in profit margin. So probably that's why investors are capitalizing their gain at the moment. Yeah.
There's one question that there's a question, why do they need to adopt a diversification strategy by acquiring the Australian company when SEUs look so promising in Southeast Asia? So it's just a business diversification thing. The SEU's demand is still very high. The current order book, they have around 7 of them in the current order book. They are negotiating for I think 6 to 8 more, and out of that we believe that probably they'll get 1 or 2 more contracts. And remind that these one SEU contract worth like 50 to 60 million. Now, one reason for acquiring this Australian company is because previously when they were working on Liquid Constellation, and even for SEUs that they build, they actually, because the yards are like very near to each other, they're like the approximate a distance of like few hundred meters only. So they used to like take their help building some parts of the structure of vessels. So they already had like synergies working together. They have already been working together, and this is more to like utilize their capabilities, but because their business, they deal with aluminum based vessels as well. So it's just more of a business diversification way to like to make a company more prominent into different segments.
Hi, Kenneth here, the market analyst. I just want to extend an answer on gold, actually. There's a question about gold. What's the outlook? Well, fundamentally, our team, as Sam has answered previously, there are some fundamental reasons why gold should remain weak. He talked about the stronger US dollar as well as the improving global economy. So I'll just give a market outlook. Okay, so at this point in time, okay, things might change in the future, but at this point in time, the market outlook does correspond to the fundamental outlook. For the short term, gold price is still bearish. I won't go into detail, but when I use my sensitivity and breadth analysis for gold, there is no indication of a strong reversal yet. No signs yet. So because of that, yeah, we'll just make because of the fundamental reasons, and there is no forward indication of a strong reversal. Hence, it's better to stay cautious on gold, and yeah, so there'll be some weakness in the gold price. Okay, just like to note that our team does not cover Tiger as well as Lipo Mall Trust, so hesitate to give a comment on these two at this point.
Okay, there's a question. What is the fair price in the next 12 months? The person has missed that in the presentation. What is the dividend yield? They will be paying dividends of 1 cent this financial year, and our target price is set at 98 cents. There's one more question, that the oil-related companies are affected by the drop in oil price. Won't there be a direct impact with these stocks? There will be, but those impact will mostly be with the companies dealing on the upstream sector with the exploration. Companies dealing with the servicing sector will be less hit, or maybe not at all. The reasons are very simple. Even if the oil prices goes down, the production platforms will still be producing oil, like in the shallow water, or those existing platforms within the deep water as well. Now SEUs comes handy in the shallow water. In the shallow water, most of the platforms, they are aging, so they still need servicing, maintenance, repair work, and for that SEUs are the best thing to be used, because alternative to SEUs are that they need to use ASTS, other PSVs and tugboats, stuff like that, in order to do those maintenance work. SEU provides everything in one. They are self-propelled. They can go into the sea by themselves. They have the accommodation facility. They have cranes attached to it, so they can do a lot more work when it comes to maintenance and servicing sector. And so maintenance and service sector would in let's say in next 1 year would not be affected due to the falling oil prices, because the servicing sector, the services are still need to be provided to the existing production. Or the exploration part, where they make exploration mostly to the deep to ultra water, will be affected. And that's where our thesis is based on that. Because of that, the capex will shift into more into the servicing companies where the SEUs will come handy.
Hi, someone has a question on Hong Kong's market on before and after Christmas. So as we know that currently that Hong Kong's political risk has escalated recently, and for that we might be seeing some downward pressures on the SI, the Hang Seng Index. And also because of the Occupy Central and everything, right? We also noted that the retail sales are going downward, going on a downward trend. So probably that during this holiday season, we might be seeing that that might be able to prop up the retail sales. Yeah, but basically, as China as a whole, we are still quite positive on the market itself. Yep, hope that answers your question. Yep. If you don't have any more questions, then that will be all from us today. And thank you so much for your time. And hope to see you next week on our webinar. Yep. Thank you.
Especially